Good afternoon. Welcome to Midcap Radar. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra, and joining me today is Mangalam Malu. Good afternoon, Mangalam. Well, another day of deep cuts that we are seeing. We have consistently been breaching those levels, first 25,500, then 25,400. Today, we are below the 25,200 mark, down 200 points on the Nifty, and even the broader markets are not supporting.
Yeah, nearly 2 stocks in the red for every stock which is in the green right now. And we have seen a big cut coming in despite some resilience from the Nifty Bank. That's courtesy IT stocks as well as Reliance. We'll talk about all of that in just a bit. First up, all the top stories that we're tracking. Stocks see a fall after TCS's weak show. IT drags lower. Oil and gas, auto and realty are the other big drags, while FMCG, powered by HUL, ekes out gains. Midcaps fall in line.
Glenmark Pharma's Arm inks India's first big drug licensing deal with AbbVie for an upfront payment of $700 million and milestone payments of over $1.2 billion. Glenmark says it will consider rewarding shareholders from the bounty.
Anandrati gains post first quarter numbers. The company nearly manages to meet its FY26 AUM guidance in the first quarter itself. Strong double-digit growth continues. Management tells CNBC-TV18 they do not see further reduction in cost-to-income ratio.
Tata Elxsi under pressure after reporting their Q1 numbers. Constant currency revenue declines 9% YOY. Margin contracts sequentially. Stock down nearly 2.5%.
And we have shares of ereda, which slips nearly 5% as the company reports a sharp rise in the gross non-performing assets in the first quarter, a part of which was due to recognizing Gensol Engineering as an NPA. The management will CNBC TV18 they're confident of resolving the Gensol issue.
All right, those are the top headlines, and in just a bit we'll speak about the mid-cap movers as well. But for now, Nifty at the day's low. It's a 200-point cut that we are witnessing there. For the week as well, Nifty is down more than 1%. Mid-caps and small caps, they are the ones which have not been resilient at all. So the mid-cap index right now it's down around 450 points. But for the week, we have seen a sharper cut as well. Even if we talk about the Nifty small cap index, it's down around 1.3%. And a lot of earnings reactions which are kicking in. And that uncertainty regarding the trade deal with US, that is also keeping markets at the levels that we are seeing right now.
Be that as it may, from the FMCG pack, we're seeing big gains. You know, yeah. I'm not talking about HUL itself, but you have, look at Gillette. That stock's moved to the high point. We have VIP. We'll talk about that in just a bit. And VST Industries, another cigarette maker. And we have Globus Spirits. That's the other stock.
The top gainer this week as well.
5.5%. So all of them doing well. So there are pockets which are showing some resilience and some gains. So we'll talk about those movers itself. Let's go across to Vamakshi, who will take us through all the mid-caps that are moving around in trade today. Vamakshi.
Well, it's a sea of red as far as the mid-cap market is concerned. In fact, not just the mid-cap market, but all of the benchmark indices. And some of the stocks that are actually contributing to the declines today includes PC Jewelers. Keep in mind, the stock is seeing a downtick of almost 5.8%. It has been one of the top losers in the last few sessions as well. Dish TV also taking a knock in today's trading session, down almost 4%. VMart Retail as well as Amber Enterprises down 4%, each trading close to the day's lowest point. Joining them is the defense pack. The defense stocks had been the darlings of these trade, but they're all taking a knock today as well. Data Patterns down almost 2.6%. Garden Reach Shipbuilders taking a knock of almost 2.89%. Solar Industries, Mascarodox are some of the stocks that are declining in trade today. But let's then focus in on the newsmakers, because that is where we do have some good news. Glenmark Pharma is up almost 14.5%. In fact, the stock managed to reach an all-time high today. Enviro Infra, there was an order win yesterday. There was an order win the previous day as well, and the stock continues to gain, up almost 12%. Anandrati reported a good set of numbers. Stock up almost 4%. Ereda as well as Tata Elxsi, not a great set coming in from both of these companies. The stocks down and out in trade today. And let's finally look at some stocks that are bucking the trend in today's trading session. Stocks includes Datamatics. The stock has surged to the day's highest point, up almost 8%. 8.3%. NetWeb, VST as well as Vocard are some of the stocks that are gaining momentum in trade today.
Interesting names there. Thank you so much, Vamakshi, for joining in with all those details. It's a good time to get a technical check on the markets. Let's welcome Rajesh Palvia from Axis Securities for just that. Rajesh, good afternoon. Well, it's a big cut that we're seeing right now, continuously breaching important levels. What is the next important level to watch out for, and your individual picks as well?
Yeah, good afternoon. So Nifty broken its important support area of 25,300, and the major call writing activity is now, taking place at 25,300, 25,200 strikes. So that clearly giving a sign that, yes, we could see further more pressure in the Nifty, as Nifty is now slipped below to 20-day moving average support area also. So I think if now Nifty trades below 25,200, 250 zone, we might see further more cut towards 25,100, even 25,050 kind of level in the continuation of this, down move for the Nifty. So 25,000, 25,050 would be the next major support area for this correction. Bank Nifty is almost hovering near to its 20-day simple moving average support area, which is placed at around 56,600 zone. So if at all Bank Nifty breaks below 56,600, then here also we may see some more unwinding pressure, as call writers are now creating their position at around 57,000. So that level may act as an immediate hurdle for the Bank Nifty also. Nifty mid cap also slipped below to 20-day moving average. So I think some more weakness we may see in the market in next couple of days, until the Nifty not able to move back beyond 25,350 or 400 zone. On the stocks front, some of the mid cap stocks are looking attractive and fresh breakout is there. So two stocks ideas, both are on the buy side. First one is NetWeb Technology. Stock taken the support from its 50-day moving average support area, and after a brief consolidation of 3-4 days, stock managed to give breakout with the volume action. The kind of breakout which we are witnessing on the daily weekly chart, we believe that this momentum can extend further, and possible target towards 2000 to 2020 we may see for this NetWeb Technology. One can buy with stop loss of 1905. Another stock is EID Perry, a fresh breakout on the counter. So looking at the breakout, we believe that this momentum can extend further. Target we are projecting around 1190 to 1220. One can buy and accumulate with stop loss of 1120.
Right, Rajesh, thank you so much for joining in and giving us your stock picks. We're also seeing some traction build up in Worldpool. They've informed the exchanges that Nippon India has bought some shares in the company that has been disclosed. So Worldpool has moved to the high point. And we have, another stock which is spiking right now is Balrampur Chini. So watch out for the sugar pack as well. Typically, all the stocks move together. So Balrampur Chini is one of them, which is now just about shown a bit of a spike. Let's see whether other stocks follow or not. Union Minister for Heavy Industries, H.D. Kumaraswamy, has announced that the centre will soon be launching a scheme with an outlay of nearly 1350 crore rupees to make rare earth magnets in India. Remember, CNBC-TV18 on June 24th had reported that the government is likely to rule out a rare earth magnets manufacturing scheme.
Some progress is going on. We already allocated 1,345 crores. 1,345 crores. We are selecting two manufacturers.
Scheme has been circulated for 1,345 crore subsidy for manufacturers. It is under 345 crores. It is under interministerial consultation. We are interested only in magnets. Anybody who gives us magnets will get incentive.
Anyone who gives us magnets will get incentives. That's the new scheme that has been launched, nearly 1,350 crore rupees. But with that, we'll take a short break. And as we do that, let's tell you about CNBC TV18 Prime, which is something which is our newest offering, which brings you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impacts on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, 1 p.m. for the Big C and Global Lens at 8:30 p.m. Welcome back. Piramal Enterprises among the broader markets moved to the high point of trade, even as the frontline index is now down 210 points, the mid-cap index down 500 points. Let's Welcome Rima on the show. Rima, lower on Tata Elxsi today. The street didn't like these numbers.
No, they didn't like the numbers, and the stock has seen quite a fall. The all-time high in the stock was 10,760, and anyway, the stock has been weak. For the last 3 years now, it's not given any return. In fact, if you look at it, in the last 3 years, the revenues have fallen by nearly 27%. But let's explain today's fall. For one, the stock went into its earnings with a little bit of an outperformance versus peers. Look at the 3-month performance. Tata Elxsi share price was up 23%, outperforming some of the peers. So while it's underperformed over the last 3 years, just in the recent last few weeks, there was a bit of an up move, particularly from the April lows. Then, in terms of numbers, this was the 4th consecutive quarter for miss and very weak numbers. Revenues down 9% on a year-on-year basis. And growth for the company has also been slowly deteriorating. This was a company which went to its all-time high levels, enjoyed very high valuation multiples when the revenue growth used to be 30-35%. But now the revenue growth has been moderating for the last 2 years, and this year, analysts are expecting negative growth. Both Kotak and Morgan Stanley anticipate a negative growth this time. So this company is likely to degrow, according to analysts. And despite that, valuations, as some point out, is on the higher side, with the stock trading at over 40 times forward multiple. Back to you.
Okay, all right. The stock has recovered, though, a little bit from the lows of the day, but explains the move that we have seen on the back of numbers as well. Ereda is the other stock on our radar, has slipped 5% in trade on the back of its Q1 earnings. Gaurav is joining us with the details of the numbers and highlights from the management conversation with us earlier. Gaurav.
Well, yes, Ereda, when we talk about numbers, top line growth was fine. When we look at net interest income, that increased almost by 38%. PPOP also grew at 49% on a year-on-year basis, but what remains weak is the profitability. And this was largely because of the asset quality. Specifically, when we talk about NPS, we have seen a huge jump somewhere in the range of around 150 crore rupees. Now, this is attributed to 2 accounts. First is that Gensol account, where we have seen around 750 crores of NPS coming up. This was actually known. Another account, which was actually surprise for the market, was one of the borrowers who was shifted from the stage 2 assets to NPS of around 780 crore rupees, and that is the reason why the street actually reacted negatively in terms of earnings. Other than that, there is another issue, is that the stage 3 assets and the slippages are also rising, and that is something which was considered on the back of all the issues. Now, management say that in terms of growth, they are going to sustain the growth that we have seen for the company somewhere in the tune of around 25 to 30%. Other than that, they also expect around 12 to 15 basis point of easing in cost of borrowing because of the recent announcement where the company is now allowed to issue bonds in terms of 54 EC. What they are also saying is that in terms of NPA, they do not see any kind of stress even rising for the company. In fact, they are very confident that they will make some recoveries. And specifically in terms of Gensol, what they have said is that they already had made provisions for the other account. In this quarter, we have seen provisions only for the Gensol account. And from here on, they also believe that the asset quality and the recovery from Gensol is something where they are positive. So, positive commentary from management, but in terms of growth, we have seen some negative surprise, and as a result, we are seeing stock is actually down more than 5% today.
Right, Gaurav, thanks a lot for that. Apart from, ereda, which is down 5%, let's talk about Anandrati. The stock at one point was up 5% and now continues to hold on to those gains. Vamakshi joins in with those details. Vamakshi.
Well, Mangalam, it's a good set coming in from Anandrati. As far as the company's guidance for FY26 was concerned, they managed to meet almost 88% of the AUM guidance. The total revenue from operations surged by almost 23% quarter on quarter. So very strong double-digit growth is what we've seen in the first quarter. Similar to the historical trend that we've seen in the past. As far as the cost-to-income ratio is concerned, that managed to see an improvement of almost 571 basis points, thereby putting the margins higher for the company. The net profit seeing an uptick of almost 28% quarter on quarter. Now let's look at how the company has performed as far as its FY26 guidance is concerned. Like I mentioned before, 88% of its AUM guidance for FY26 has already been achieved. They managed to achieve almost 24-25% guidance when it comes to their revenue as well as net profit. And we were also joined by the management earlier today on Chartbusters, and they said that they are largely maintaining the FY26 guidance. They've in fact added the highest net mobilization in the first quarter, 3,800 crore, despite the kind of uncertainties that we saw. They do not see a further reduction in the cost to income ratio because they will continue to invest in the company itself. Their Dubai office has done very well so far, and they're also expanding their reach in Bahrain as well as the UK, and they do see some potential in the overseas operations. However, they have not yet taken a decision on expansion in GIFT City. So those were some of the important takeaways. The stock is up in trade on the back of good set of numbers as well as commentary from the management.
Take that point, Vamakshi. Thank you so much for joining us with those details. But you're also tracking Z Entertainment. The stock is under pressure. The company's plans for raising funds has hit a roadblock. Tell us more.
Well, absolutely. Keep in mind that the shareholders were to vote on the special resolution which involved issue of convertible warrants to promoters, but they've gone ahead and rejected that. Now around 59.5% shareholders voted in favor, while 40.5% shareholders voted against this resolution. Keep in mind that typically in order to pass a special resolution, a majority of almost 75% at a minimum is required. So therefore, this resolution did not get passed. Now, keep in mind earlier as well, 3 proxy firms, which is IIAS, SES as well as InGovern, had advised shareholders on voting no for the issue of warrants to the promoters, and some of their key objections included the rationale behind fundraising plans, given that the company already had a huge cash balance on the balance sheet of almost 2,410 crores. The other reason that they highlighted was the choice of the financial instrument, because it would have resulted in a dilution of almost 15% for the non-promoter shareholders. Resultantly, given the fact that the resolution has not passed, the promoter shareholding now still stays at 3.99% as compared to 18.39%, which is what it would have been if the resolution was passed. So negative news flow for Z Entertainment, the stock down in trade.
Take that point, Vamakshi. Thanks a lot for that. Just before we slip into a short break, Tarmat Limited, that's the stock that should come up for you on the screen. Nothing, that we speak about regularly in terms of Tarmat, but right now the volumes traded are nearly 35 times the average that we've seen, and the stock has seen a big spike up around 16%. Most of the gains coming by in just the last 10 minutes, even as the stock was flat through today's trading session. So watch for Tarmat Limited. Take a short break. On the other side, we have markets and mid-cap movers which are making news. Nifty Bank is showing some recovery, so watch out for that. It's being led by Kotak Mahindra Bank. So Kotak Mahindra Bank at the start of the week reported its first quarter update was fairly good and supported the Nifty Bank all through the way. Up 4% for this week, but right now is batting for the Bulls on the Nifty Bank, which has now cut its losses just to around 185 points. We have VIP Industries, which is in focus today, and that's largely because we understand from sources that the promoters are looking to exit their stake. Remember, the promoters had earlier alluded to the fact that they are looking to exit largely because of lack of succession, but right now the talks have reached advanced stages. We understand from our sources that it is a lot of private equity players which are looking to pick up that space, and one of them is multiples PE as well. If the deal does go through, remember, it will trigger an open offer for minority shareholders because the promoters do own 51.7% stake in the company. But more importantly, if you just look at VIP, the promoters alluding to them, looking to sell stake, as a business, it has been underperforming when it comes to the share price. That the deal was brewing is something that the street was sniffing all through, because despite weak numbers, in the last 3 months, from the lows, the stock has rallied almost 75%, but still from the highs that it hit earlier in 2021, 2022, it's down about 36%. Importantly, if you notice, what we'll watch out for is the peers. We have Safari Industries in the last 5 years, which has rallied about 1100% as against VIP just 82%, and this too from the lows of COVID. In the meanwhile, while VIP has underperformed in the stock market, revival of brand VIP, growth in Skybags and Carlton is something we'll watch out for, along with CSD and, general trade, which we'll keep an eye out on. And finally, watch for competition coming in from existing players like Mokobara, Uppercase, and other newer players. So a deal likely, maybe perhaps soon.
Okay, perhaps soon. So we'll be watching out for that one. Thank you so much for those details, Mangala. Well, from the broader markets, we do have a lot of movers. Jindal Worldwide, for instance, is down 8% in trade as we speak. We do have BEML, that is the other name, which is down 3.5%. The mid-caps continue to be under pressure, though it has recovered a wee bit from the lows of the day. The other one is Keystone Realtors. Metropolis Health is also lower in trade. Remember, it has been buzzing since the time that Q1 update came on the upside. So there is some profit booking that we are seeing right now. Natco Pharma is seeing some profit booking today. The amine stocks, Balaji Amines and Alkyl Amines, both these stocks are lower in trade today. Sapphire has also come in for some profit booking, so 2.5% gone there. But of course, we keep talking about Glenmark. That stock is up around 14%. PFC, REC, these two stocks continue to be higher. So these two stocks are up around 2%. So these are a couple of names from the broader markets which are making big moves today. But as you said, Bank Nifty is the one which is supporting the Nifty a little bit. So that index is not falling as much as the headline index is right now.
And as we slip into that short break, keep an eye out on Eternal and Swiggy. These stocks have recovered from the lows. Actually, for most part of the trade, they were in the red and now have moved into the green. So Eternal Zomato stock comes up for you. And alongside that, we have Swiggy as well, which has now seen a spike, moved from the green, into green from red. We wrap up on this edition of Midcap Radar. Thank you so much for watching. Your stocks when we return.